Tax season is here and you may have been selected for auto assessment by SARS. They have increased the number of people that they're going to auto assess, and this is an initiative of theirs to help people who have less tax situations to complete their tax returns at the end of the year. I know that especially if you're a first-time person, first-time employee, it can be a little bit daunting when it comes to having to complete your tax return, but it's actually not as difficult as it may sound. So what SARS will do is, based on the information that they've received from your employer, from financial institutions, from the medical schemes, from retirement annuity funds and other third-party data providers, they would then use that information to auto-assess you, to prepare your tax return. Auto assessments are going to be rolled out during the 1st of July to the 14th of July. And how you'll know if you've been auto assessed is that you'll get an SMS from SARS. So you'll receive a SMS or you'll receive an email from SARS notifying you that you've been selected for auto assessment. What you'll do is, when you get that SMS or that email from SARS, is that you just have to log on to your SARS profile and check whether you agree with it or you don't agree with it. So you can either agree with the auto assessment that SARS has done for you, or you can disagree with it. So if you disagree with the auto assessment, then you will have to file your tax return as normal from the 15th of July up until the due date of 21 October 2024, and you'll file it as normal. So you'll go in, request a new return, and then fill in the information. I do want to do a video on this, and I'm going to link it in the description or somewhere when I get to that point. Please do beware of scammers during this time. You may get like SMSs from dubious numbers sometimes that look exactly like you'd get from SARS. Please don't click on any links in any SMSs or emails that you get. Rather go in and log into your SARS profile using your own credentials. So there's three outcomes if you agree with this auto assessment. It's either you are in a refund situation, secondly, you can either owe SARS, or third, you're nil. It's a nil effect, right? So the refund position means that SARS owes you money. And if you agree with it and it's a refund, then there's nothing further that you're required to do. All you have to do is to wait about 72 hours. They said it's about 72 hours for you to receive your refund. And yeah, so after you get the SMS, you agree with it, you do a refund, and then you just wait for the 72 hours. There's nothing else for you to do, right? But you have to check that your details online, you have to check that your details on your tax return are correct, and also check your banking details. Something else to note is that if your refund is 100 Rand, right, or less, then they're not going to pay that to you. That is going to be rolled forward to the next tax year. The second option is that there's a payment due to SARS, right? So this means that you're going to have to pay SARS their money by a certain date. You just have to log in. So say you agree with the assessment firstly, then you are liable to pay an amount of money. So it will tell you on your IT 34 how much you have to pay and by when you have to pay it. So you just have to make that payment when it's due to be made. This doesn't happen often, and the reason why is that if you have a less complicated tax situation and your employer has been taking the right amount of tax for you every month, then you shouldn't really be in this situation. This can happen maybe if you've got a side hustle, you've got multiple sources of income, for example, rental income, interest income, things that SARS may not know and your employer may not know, right? That's a different situation. You may find yourself in a position where you actually owe SARS because you've earned more income than they were aware of. The system that we currently have in South Africa is that we pay tax as we earn it. So if you're an employee, you're going to pay tax monthly, and your employer is going to deduct tax from you and pay that over to SARS. Come the end of the financial year, the tax year, you're going to have to complete your tax return, and this will determine, do you either owe SARS, do they owe you, or is there any other effect? right? So it's actually easier for them to take money from you every month so that by the time you do your tax returns, you say, okay, fine. If you just have one source of income, that is your income from your employer, right? You probably are not going to have to pay tax. Okay, but it can happen that you have other sources of income and other deductions that you want to put on your tax return, and that can either put you in a refund position or a tax payable position. So this tax period is from 1 March 2023 to 29 February 2024. So anything that you've earned in that gap is what this tax period is for. So when you go onto SARS and you log in, that's what the tax season is for this year. And then the third option is a nil return. This is you don't owe SARS, SARS doesn't owe you, and then you don't have, like, it's this, there's nothing to do. This is the next best option to a tax refund. Like, the best option is for you to get a tax refund, right? But then the second best option is to have a nil return. This is when you earn a certain amount of money from your employer and they deduct a certain amount of tax due to SARS, and then you find yourself not owing SARS anything at the end of that tax year. So it's definitely the second best option. Obviously, you would want a refund. That's a little bit better. But barring that, this is the best option, the second best option that you want to find yourself in. I don't think you really want to find yourself owing SARS. So yeah, so nil return, nothing to do. You just continue living your life. If you don't agree with the auto assessment, you just have to file your tax return as you normally would. So from when it opens for everybody else on the 15th of July up until the deadline, the 21st of October 2024, you can just file your return as normal and then put in all the information, like the extra information, whether extra income that you've earned, other deductions that you want to account for, and then file your tax return the normal way. For 2024, the tax season is the same for salaried employees. So that means that the deadline is up until the 21st of October 2024. So SARS may not have all your tax return, your tax certificates. Your tax certificates may not be all up to date. And there's also other things that SARS is not aware of that you have to individually declare. So maybe you've received income, rental income, interest income, any other source of income that you want to put on your tax return. And then also you may want to also account for other deductions. So if you've used your home, like a portion of your home for business purposes, there is some deductions that are allowed in that case. So there may be other deductions that you also want to account for in your tax return. So that could be things like contributions to charities, using your home for business purposes, wear and tear, motor vehicle expenses, and then maybe other medical expenses that are out of pocket and are not taken into account with your medical contribution deductions. So there are other things that SARS may not be aware of, and therefore you can find yourself in a situation where you actually reject the return and then you then put in the rental income, other forms of income, other sources of income that you have, and also other deductions that you have. This can actually lead you to a case where, if, for example, you have other sources of income like a side hustle or something like that, it can lead you to pay more tax because SARS would have only taxed you on your salary from your employer. So if you have a side hustle and you're earning income, you've got a rental property that you're earning income, you can actually find yourself paying more tax. Or if you have deductions that SARS may not know about, like, for example, wear and tear, motor vehicle travel expenses, contributions to charities, and what else, like home office expenses, then can find yourself deducting more, and then SARS then owes you a refund. Remember, when you are doing your own tax return and you're putting in all these other deductions and even the income, that you keep supporting documentation and you keep these things handy just in case SARS comes back and wants to assess you. And then you'll have the support to then say, okay, this is the deduction that I claimed, and this is my support for the deduction that I claimed. So if SARS has refunded you and you reject and you don't agree with it, right? So you'll just have to wait until the 15th of July to file in your tax return as normal. So this will allow you to then include any additional income that you've earned, and also allow you to include any deductions that SARS may not know about and maximize your chance of a further refund. When you file your tax return, then you'll be issued an assessment, an ITA 34, and this ITA 34 shows you your tax liability or your tax refund. If you have extra deductions, so you have received a refund from SARS, right? But you have more deductions that you want to declare. So when you go, so on the 5th, from the 15th of July, when you complete your tax return and you include the extra deductions that you have, right? You can actually find yourself having been owed more than what SARS refunded you, and they will then pay you the difference of what they've already given you compared to what your tax return actually says is due to you. You can actually find yourself receiving more refund from SARS. If, however, you find yourself having to declare extra income, then you can find yourself owing SARS. So the refund that they've already given to you, and then they'll compare that to the tax that's on the extra income. And then if you owe them more money, if you owe them tax, then you'll have to pay that within the time that your ITA 34 says you should make the payment. So if they later find out that they've made a mistake on the auto assessment of you and you accept it, right, then you're still liable. You may be liable for penalties of up to 200% of the tax payable plus interest. So don't just accept something just because SARS says this is what they have, because when they did it with the best information that they would have gotten from your employer, from your financial institutions, from your retirement annuities and your medical schemes. So then they completed your tax return with the information that they got at the time. But if the information is correct, the onus is on you to then say, okay, I don't accept this because of XYZ, and then to file your tax return correctly from the 15th of July up until the 21st of October with the correct information. If you miss the deadline to complete your tax returns, then SARS may issue you penalties per month up until you file your tax return. So you do have up until the 21st October to do your taxes, so it's still a long ways away. But please do remember to do your tax returns and don't leave it until later or get into trouble. But if you do have an assessment and you agree with it and it's a refund, I think you are in the best position possible and you're done with taxes for the year and you continue with life. But if you owe SARS, you'll have to pay them. If you disagree, you'll have to file your tax return as per normal. And yeah, and the struggle is probably still on for you. So yeah, so thank you guys for watching this video, and I'll see you in the next one. Bye.